All right, welcome to the Explainer. Today, we're diving into a really fascinating investment thesis all about drones. And the core idea here is that we are right on the cusp of something huge, a full-blown autonomous sky revolution. So, what does that really mean? Well, the central argument is that drones, or UAVs if you want to be formal, are way more than just a cool gadget or a niche product. They're what's called a general purpose technology. And that's a big deal. We're talking about something on the same level as the internet or the semiconductor, a truly foundational piece of tech that's going to change, well, just about everything. And look, this isn't some sci-fi dream. We're already putting real numbers to this transformation. Check this out. $157 billion. That's the projected size of the total drone market by 2034. That's not just growth. That is an absolutely massive runway. Okay, so the big question is, why now? What's so special about this moment? Well, it's not any single thing. It's actually this powerful convergence, a kind of perfect storm of three key catalysts all hitting at once, creating this incredible virtuous cycle that's just fueling explosive growth. Let's start with the first and, honestly, probably the most important catalyst of them all. It all comes down to the rules. The rulebook for the sky is being completely rewritten, and that's unlocking everything. And the magic acronym you need to know is BVLOS. It stands for Beyond Visual Line of Sight. This is the absolute game changer. It's the green light that says a drone can fly where its pilot can't physically see it. That single change is what transforms a drone from just a local tool into a piece of a vast networked infrastructure. This is how you get long-range package delivery or inspect hundreds of miles of pipeline automatically. And this really sets up two completely different paths forward, and it all hinges on how these regulations play out. The super optimistic bull case, we get clear rules from the FAA and in Europe, and it triggers this massive land rush of investment starting around 2026. But the bear case? Well, that's what happens if we get bogged down in delays, public backlash, or rules that are just too expensive to follow. That could pretty much ground the whole drone economy before it even takes off. Okay, so new rules are great, but they're only one part of the equation, right? They don't mean much if the tech isn't there to take advantage of them. And that brings us to our second catalyst. The technology is finally mature. We're seeing this incredible wave of innovation that's making drones way smarter and way more capable than we've ever seen. And again, it's not just one thing. It's this beautiful convergence of a bunch of different technologies all coming together. Think of it like building a robot. AI is the brain that lets it make smart decisions on its own. 5G is the super fast nervous system, so it can communicate instantly. Then you have these tiny, powerful sensors, like LiDAR and thermal cameras, acting as it senses. And maybe most importantly, we're finally cracking power. Better batteries, even hydrogen fuel cells, are giving these things the endurance they need to fly longer and do real work. So just like with regulations, you've got two sides to the technology story. The bulls are saying, hey, Moore's Law is still in effect. They believe the tech will just keep getting better and cheaper exponentially, making full autonomy a no-brainer for everyone. But the bears are a bit more cautious. They're pointing to some really tough physical roadblocks, like how much energy you can cram into a battery, or the fact that 5G isn't everywhere yet. And those things could keep the costs stubbornly high for a long time. And that brings us to the third and final catalyst, which is maybe the most convincing of all: money. We're talking about proven return on investment. Businesses are officially moving out of the let's play with this new toy phase. Why? Because the numbers are in, and they're showing that drones can make them or save them serious cash. Not tomorrow, but right now. And this is not just some feel-good story. Just look at the hard numbers. The commercial drone market, just the commercial side, is expected to basically quadruple in under a decade. We're going from around $17 billion to over $65 billion. That's not hype. That's pure, undeniable market demand pulling this industry forward. But here's the million-dollar question. Can these early success stories be copied and pasted across entire industries? The bull case is this amazing domino effect. They call it a competitive cascade. One construction company starts saving a ton of money with drones, and suddenly every competitor has to do it just to stay in the game. The bear case is that it's not that simple. Companies could get totally bogged down in the hidden costs, integrating all that data, managing a fleet of drones, and that shiny ROI we talked about just fizzles out when they try to scale up. All right, so we've established the why now. We have the three catalysts. So, if we accept that this revolution is really happening, let's peel back the layers. Let's really get into the anatomy of this new drone economy. How does the money actually flow?
Because if you want to understand where the opportunities are, you have to ask the most fundamental question. Where is the value really being created in all of this?
And this is where the investment thesis gets really interesting. It argues that the smartest place to put your money might not be on the companies making the drones themselves. Instead, it's on the companies making the foundational tech inside every drone. You've heard this before. It is the classic selling picks and shovels during a gold rush strategy. So you can think of this entire value chain in 3 simple layers. Layer 1, at the bottom, you have the enablers. These are your picks and shovels folks, making the crucial components like computer chips and sensors. Layer 2 is the platforms. These are the companies actually building the drones. And then on top, you have layer 3, the applications. These are the services that use the drones to do something valuable, like delivering packages or analyzing farmland. Now, this is what's so fascinating. Even if you just look at that first layer, the enablers, you see this huge range of companies. You've got a company like Ambarella making AI vision chips, really high growth but not yet profitable. Then you have a rock-solid, profitable giant like Teledyne making sensors. And on the other end, a pure-play LiDAR company like Ouster, growing like crazy but also losing a lot of money. It just goes to show you that even within the picks and shovel strategy, there's a whole spectrum of risk and potential reward. Okay, so we have this framework. We see the opportunity, but how do you turn that into an actual practical strategy? More importantly, how do you balance all this excitement with the very real risks that are out there? Well, the thesis suggests a really smart, balanced strategy. It's called the core satellite approach. And the idea is actually pretty simple. You build the main part of your portfolio, the core, with the big, stable, established leaders. Then you use a smaller part, the satellites, to make more targeted, aggressive bets on those high-growth, but also higher-risk innovators. And this chart really brings that idea to life. You can see the big chunk, 60 to 70%, is that stable core. That's your exposure to the whole industry. Then you have that smaller 30 to 40% satellite allocation. That's where you go hunting for those companies that could potentially deliver massive returns. It's a way to ride the big wave while also trying to catch a lightning bolt in a bottle. But we have to be realistic here. This future is absolutely not guaranteed. There are some serious headwinds. For one, a lot of these stocks are already expensive. There's a lot of hype baked in. We've talked about regulatory delays. What if that ROI we mentioned just doesn't scale up? And then there's intense competition, global supply chain chaos, and maybe the biggest wild card of all, public opinion. People have real concerns about privacy and noise, and that's a hurdle the industry has to clear. So where does that leave us? The big takeaway from this whole thesis is that the pieces are falling into place. The technology is getting there, and the rules are finally starting to catch up. The economist's sky is coming. The only real question left is the one investors have to ask themselves. Is this going to be a smooth flight, or are we in for some serious turbulence?